Afternoon, we will be starting shortly. So, good afternoon to all. My name is Chanel Kalleya and I am from the Corporate Strategic Planning Department. I wish to thank you all for attending today's seminar entitled 20 Years of the Euro Banknotes and Coins. Euro banknotes and coins are everyday reminders of the advantages that the EU brings to its citizens. On the 1st of January 1999, 11 EU countries launched the euro as their new common currency. On the 1st of January 2008, the euro became legal tender in Malta, replacing the Maltese lira. The euro was initially an electronic currency. Euro banknotes and coins were introduced 3 years later. Today, the euro is the currency of 19 EU countries, and it is one of the most important currencies in the world. This year, the Ecb and the euro area members are celebrating the 20th anniversary of the euro banknotes and coins. Central Bank of Malta is a proud member of the euro system and thereby is also celebrating this important milestone in the history of European integration. This webinar is part of the Central Bank of Malta's commemoration of this important milestone. After this short introduction, I would like to remind you about some housekeeping rules. This video will be recorded and posted on the bank's website. Please set your microphone to mute unless you are going to make an intervention. We would also like to ask that your camera is turned off unless you are going to speak, as this makes communication easier. Questions will be taken at the end of the webinar. I now invite you to watch a short video prepared by the European Central Bank about the introduction of euro banknotes and coins 20 years ago.
La moneda europea se denominará euro.
The introduction of euro banknotes and coin marked one of the major, if not the major step forward in the history of European integration.
Okay, so let me now introduce you to Professor Edward Cicluna, the Central Bank of Malta's governor, who will deliver the opening address of this webinar. Governor, the floor is yours.
Thank you, Chanel. Good afternoon, everybody. Celebrations are due when you launch a very important event like the Euro, as we saw in that film, but also after a period of time when it's time to commemorate or remember that period of time and see exactly what has been accomplished to date. So celebrations are due today as well, and the Central Bank of Malta that's why we have this seminar in order to commemorate this important event. As we know, the essentials of it, of course, at that time, we're trying to sell it to the people to understand that it was important for traveling, for comparing prices, in order to increase business for firms. And all this has been accomplished. In other words, what we expected to happen did in fact happen. It helped a lot of the economies. It boosted the economies because it eases trade. But essentially, since we are in the European Union, one couldn't have a European Union, a serious one, an economic one, or a political one, without having a monetary one. So it was so important that we have one central bank, one monetary policy at the European level, of course, and also a common currency. And this is why the euro is so important, because it culminates this process towards a union. Of course, many other aspects are still to be accomplished, but let's celebrate at least what we have accomplished. Nobody ever thought that during these 20 years would meet with a biggest disaster, which is an international financial crisis, with all the problems it brought about by sending us into a deep recession. But you could tell that with the aid of this, with the European Central Bank and also the governors, and when it comes to the Council of Ministers of Finance, together they did whatever was required. And since then, a raft of regulations, also institutions. We have the single supervisor added to this, and in order to ensure not just price stability, as it is the mandate of the central bank, but also financial stability. We also know that it was important at that time to have convergence. You recall the Maastricht criteria, which all the governments signed at that time. And now, all the governments who are in the Eurozone have indeed signed their commitment to join the Eurozone. And we also had a period of time where this convergence, especially of exchange rates, we refer to it as ARM. We had the RM1, we had also the ARM2. We still have things to complete. Foremost is the European deposit insurance guarantee, which was required. There was a lot. It has been dragging on for a long time. There were issues, political ones as well, but we need to go forward in order to complete the monetary union. And then after that, we'll go to the capital markets union. We always compare ourselves with the United States of America. The attitude towards business, towards risk taking. We would like so much that the European Union would be at that level as well. More venture capital, more entrepreneurship, more innovation. And this is required with the Capital Markets Union. So that will come next. So in all, whether it's the euro, all these institutions or gathering, and because they will reflect themselves in institutions, are all with an objective to strengthen the union, not just at the political level as we are seeing now during this unfortunate tragedy unfolding before our eyes. But the stronger the union is, the stronger the European Union is, the higher the reputation in the world, and the more we can achieve what we believe in, whether the democratic principles, financial, economic, and political. Ahead, of course, we have, hopefully we won't have as many crises as we've had in this short period of time. After the financial crisis, we had the pandemic crisis. We're not yet out of it. And then we have this Russia war in Ukraine. But looking forward, now we have big challenges ahead. And once these crises are behind us, we need to look at the biggest challenge of all, which is climate change. And the European Central Bank has taken now this objective of doing whatever is required with our own limitations. We must admit we are not governments. We're not a fiscal, the fiscal policy is not in our hands. It's just monetary. But we will be making sure that we monitor the situation. We'll try to model and insert certain new variables in our models so that we would be able to deal not just with the shocks which the climate change itself brings about, but also the policy shocks from governments when they um, pass legislation or even fiscal, taxation and so on polluting or or behavior which affects negatively climate change. So this is first and foremost something which, including our own central bank, is doing by even having a portfolio which addresses that issue by making sure that it invests in green bonds and other securities and away from brown industry, which is causing this climate change. The next challenge would be digital currency. As you know, the distributed ledger technology, sometimes we call it, or at least one of it is the blockchain, but is an important revolution. However, it brings in a dilemma in the sense of who would like so much to get the benefits of it, but at the same time, it brings anonymity and therefore issues regarding money laundering and crime in general. So the central banks of the euro system are putting their heads together with the ECB's own staff in order to see exactly what would be the most appropriate digital currency for us, which not only achieves the benefits which the revolution has brought about, or the potential it has brought about, but also brings with it price stability and also financial stability. So as you can see, looking at the past 20 years, we can be proud of what we have achieved. But again, at the same time, we also must admit and see what is still left to continue in order to have a proper monetary union, and at the same time, facing the new challenges with a certain spirit, which so that we would be able, strong enough, in order to deal with them for the benefit of the people. After all, this is not just for the technical stuff for our own people working in central banks, but for the population at large who are eager to benefit from our own work. So now I'll give the words to the next speakers who would be able to amplify more and enrich this seminar. Thank you.
Thank you, Governor. We are now moving to our first presentation by Elaine Lenzo, who is a senior currency analyst at the Central Bank of Malta. She received her bachelor's degree in economics from the University of Malta in 2005 and joined the cash department of the bank thereafter. She gained experience in technical analysis and is responsible for forecasting the yearly currency requirements and monitors the recycling activities carried out by third parties. She is also responsible for the bank's educational campaign on the euro currency. Elaine, the floor is yours.
Thank you, Chanel. Okay. Okay, can you see my presentation, please?
Yes.
Okay. So during the next 15 minutes, I will be talking about the advantages of Eurocash and what lies ahead for the single currency. I will start off by giving out some background focusing on the timeline of the currency. Then I will list the advantages of the common currency. I will talk about the Eurocash strategy and the cash cycle. Then I will go through the current design elements of banknotes and coins and their relation with the continent. And lastly, I will give more information about the future of the euro, namely the third series and the digital euro. So some background of our currency. The founding of the European and Steel Community back in 1951 was the first step towards the creation of the EU and the Monetary Union. This community was founded to create a regulated market for coal and steel. It was so successful that the countries involved decided to integrate other economic sectors too. This gave birth to the European Economic Community, the EEC, 6 years later. On 13 March 1979, a European monetary system was created to keep the exchange rate of various currencies in Europe stable. This gave birth to the European Currency Unit, the ECU, which was a unit of account used by the European Economic Community, and it was composed of a basket of member countries' currencies. The ECU was used to price some international financial transactions. The Maastricht Treaty finally established the Economic and Monetary Union in 1993. Binding rules were laid down that countries had to fulfill in order to be able to introduce the single currency. On 1 January 1999, the euro was launched virtually as the single currency in 11 EU member states. 3 years later, in 2002, the euro entered circulation as the cash currency. Due to its great success, more states joined the Eurozone in subsequent years. And it was in 2008 that Malta adopted the currency after years of preparation. In 2013, the first banknote from the second series was introduced, the Euro 5. Other denominations followed gradually until full completion in 2019. This graph here shows the total banknote in circulation, both in the euro area and in Malta. The number of euro banknotes in circulation has risen steadily, as you can see in the graph. This reflects both the importance of cash in our economy and the euro's international appeal. Banknotes in circulation in the euro area totaled 27.9 billion pieces, with an overall value of 1.5 trillion euro in January 2022. Interesting to say is that a third of this amount is being used outside the euro area. In last year, there was a yearly growth rate of 8%. The circulation in Malta was that of 28.5 million pieces, which was equivalent to 2.1 billion euro at end of January. The yearly growth rate in Malta was double that of the EU at 16%. The adoption of a single currency was considered one of the most important successes of the effort to unify the countries of the EU. Obviously, a common currency has indisputable advantages. The first being price transparency. With a common currency, of course, it will be easier to compare prices in different European countries because they would all be in euros. Exchange rate uncertainty undermines business confidence in investing. Therefore, with a single currency, business confidence should lead to greater trade and economic growth. Greater price and cost transparency encourages intra-Eurozone trade and tourism, as the euro makes it easier, cheaper, and safer to travel and for businesses to buy and sell within the euro area and to trade with the rest of the world. The ECB sets interest rates for the whole Eurozone area and is committed to keep inflation low. Countries with traditionally high inflation benefited from this greater inflationary discipline. The common currency between the members supports free movement concept of the Union between people, goods, and also services. With a single currency, there will be no longer a cost involved in changing the currencies. This will benefit tourists and firms who trade within the euro area. The euro system has its cash strategy. The first being is to ensure the availability of Eurocash, ensuring that euro banknotes and coins are available to the public at all times. The euro system supports access to cash services for everyone. People and businesses must have access to their money, whatever their preferences and payments needs. We help banks to deal with sudden surges in demand for banknotes and make sure that cash can be used as a fallback means of payment in case electronic payments are temporarily unavailable. Most people in the euro area still prefer to use cash for retail payments, as we are the Maltese. Ensuring that cash is accepted everywhere is therefore a vital part of the payment system. Euro banknotes are protected by the latest and most effective technologies to make them highly resistant to counterfeiting and also easy to authenticate. We ensure that authenticity and high quality of euro banknotes in circulation and enforce also strict standards for how banks and professional cash handlers check and authenticate banknotes. Their strategy is the environmental footprint of banknotes. Um, is we analyze the footprint of the banknotes to identify opportunities to reduce their environmental impact via new products and processes. This ensures that euro banknotes become a sustainable, green, and environmentally friendly. A coating was also added on the €5, the €10, and the €20, which are the banknotes, mostly used for transactions purposes. This coating was added to extend their life cycle by making them more durable. In this slide, I will explain the cash cycle of euro banknotes. So production of euro banknotes is a combined effort by the national central banks and the European Central Bank. Each NCB calculates future banknotes requirement or excess stocks. The total amount of required banknotes will then need to be printed. In order to produce the banknotes efficiently, printing is shared among the different banks. The ECB allocates production volumes to the national central banks, and each one of them bears the production cost for the share allocated. In Europe, there are 11 high-security printing works printing euro banknotes. Under the supervision of the ECB, the national central banks then redistribute the banknotes to avoid shortages or surpluses in any one country. So the Central Bank of Malta can receive banknotes either from another national central bank or directly from the printing works. When currency arrives at the bank, it is stored in the vault and issued to commercial banks on a daily basis upon their request. After they have been issued, banknotes enter into circulation by being supplied over the counter in banks or via ATMs. Unless they are kept as a store of value, they are used for payments, returned to banks, and recirculated until they become unfit, at which point they are withdrawn from circulation by the national central banks. In our cash center at the central bank, we check all the cash deposited by commercial banks. We do not only count the cash, but we also check whether there are any counterfeit or unfit cash. Such banknotes are withdrawn from circulation, so to ensure that all banknotes circulating in the country are both of good quality and authentic. Now let's take a look at the design of euro banknotes. So if you look at the current euro banknotes, you may know that all banknotes have windows on the front and bridges on the back. The first and the second euro banknote designs are based on the theme Ages and Style, showing architectural styles of different periods on the banknotes. The windows and doors on the front of the banknotes are a symbol of European spirit of openness and cooperation between the member states, while the bridges on the back of the notes are a symbol of communication between the people of Europe and between Europe and the rest of the world. Each banknote has a unique, distinct color so that they will be easily recognized from each other. Other common features in the design of the banknotes are the map of Europe on the back of the banknotes, the name of the currency, which is written in 3 different alphabets, the initial of the European Central Bank in 9 linguistic variants, including the Maltese, the copyright symbol indicating copyright protection, and the EU flag. Each banknote bears the signature of the President of the European Central Bank. Visually impaired users were consulted during the design phase of both the first and the second series of banknotes, which led to the inclusion of specific features in the final designs, such as the different sizes of banknotes and also the tactile marks on the lateral sides of the banknotes. So if we go to coins, I think we can note that there are 8 different denominations of euro coins. Euro coins have a common side and a national side. The national side indicates the issuing country, while the common side shows images of the European Union, which symbolize the unity of the EU. Unlike banknotes, each country had to choose the national designs. Before adopting the euro in 2008, Malta had chosen 3 designs through a competition. The winning designs were the Maltese 8-pointed cross, the Maltese coat of arms, and the altar at Hymnaidra temples. The overall value of the coins to be put into circulation annually has to be approved by the Governing Council of the ECB. However, the responsibility for minting euro coins lies within the national governments of the euro area countries. Each country may issue 2 commemorative coins per year. These coins have the same common side as normal 2 euro coins. What makes them different is their commemorative design on the national side. During her speech on the 20th anniversary of the entry into circulation of euro banknotes and coins, the ECB President, Christine Lagarde, said that euro banknotes are here to stay, as they are a tangible and a visible symbol that we stand together in Europe, particularly in times of crisis, and there is still a strong demand for them. She also announced that the European Central Bank plans to redesign euro banknotes by 2024. The launch of this process follows a commitment by the ECB's Governing Council to ensure innovative and secure banknotes that connect with Europeans. The redesign of our banknotes is a unique opportunity to make them more relatable to Europeans of all ages and backgrounds, thereby offering a new symbol of European integration. The redesign process already started with the creation of focus groups, who are tasked with gathering opinions from people across the euro area on possible themes for the future euro banknotes. A team advisory group with 1 expert from each euro area country will then shortlist the themes proposed. Following the proposals from the advisory group, the ECB will call on the public for their input on the shortlisted themes by choosing the favorite through a competition. The Governing Council will take the final decision, meaning that after completing the design process, the Governing Council will authorize the production of new banknotes and then will decide on potential issuance dates. What is the future of the common currency? Nowadays, digitalization has spread to every corner of our lives and transformed how we pay. The euro system has announced that the possibility of issuing a digital euro is currently being evaluated. In this new era, a digital euro would guarantee that citizens in the euro area can maintain a costless access to a simple, universally accepted, safe, and trusted means of payment. The digital euro would still be a euro, like banknotes, but digital. It would be an electronic form of money issued by the euro system and accessible to all citizens and firms. In October 2020, the ECB published a report on a digital euro after consultations with citizens and professionals. Experiments were also conducted, and the results were very encouraging. That is the reason the Digital Europe project was launched in July 2021. The investigation phase, which initiated last October, will last 24 months, and it will aim to address key issues regarding design and distribution. But one may ask, why should we issue a digital euro if other forms of private digital money are already available? Central bank money is unique. It is currently only offered physically in the form of cash. A digital euro would be a central bank liability offered in digital form. It would be a fast, secure, and easy to use instrument, which would be available for use by European citizens and businesses for everyday payments. A digital euro would complement cash and will not replace it. A properly designed digital euro would create synergies with the payment industries and enable the private sector to build new businesses based on the digital euro related services. A digital euro would also be an emblem of the ongoing process of European integration and ultimately help to unify Europe's digital economies. It will also ensure that consumers continue to have unrestricted access to central bank money in a form that meets their evolving digital payment needs. It could also preempt the uptake of foreign digital currencies in the euro area. This will help in avoiding risks of unregulated payment solutions. From the results of the public consultation on the digital euro, it resulted that the most requested features of the digital euro would be privacy, security, usability throughout the euro area, absence of additional costs, and usability even when offline. So in short, the majority of respondents were in favor of a digital euro based on confidentiality and protection of personal data usable offline with no additional costs. And now the slide will bring me to my conclusion. So in the previous slides, I have explained how the concept of the common currency evolved and its developments throughout the years. I have explained how it will look like as a digital currency and how it would create new synergies. However, the decision on whether to develop a digital euro will be taken on the basis of the investigation phase. With this, we reach the end of the session, and thank you.
Thank you, Elaine, for your contribution to this webinar. We are moving on to our next speaker, Mr. John Carwano, who joined the Central Bank of Malta in 1991 and spent most of his career in the economics division. He currently heads the bank's monetary policy, Eurosystem, and international relations department. He is a member of the European Central Bank's Monetary Policy Committee and was for several years an alternate member on the Market Operations Committee. Mr. Carwana graduated with a philosophy, politics, and economics at Oxford University and also holds a master's degree in economics from University of Warwick. John, the floor is yours.
Thank you very much, Chanel. Thank you for your introduction. Can I take control, please, of the presentation?
You can share directly.
I can share
John.
directly.
Share from here.
Thank you. Okay, so my presentation will focus on monetary policy in the euro area between 1999 and 2021. So it's a bit longer than the 20 years of this seminar. As previous speakers have mentioned before me, the euro was born in
John, you're
1999.
not currently here.
We can say that the lifetime of the euro has been split roughly into 2 decades. In the first decade, we have a period known as the Great Moderation, when growth was stable, when inflation was under control. The second decade starts with the global financial crisis, and then there were a series of shocks, which we'll go through in my presentation. So we have the global financial crisis. Then in the euro area, this was followed shortly afterwards by a sovereign debt crisis and risks of deflation. And then we had a gradual recovery until we were hit in 2020 by the pandemic, by the COVID-19 pandemic. As previous speakers said, so in 1999, the euro story began. Following various efforts to integrate European economies through a single currency. We heard Elaine mention the ECU, and there was the ERM and so on. In 1999, the euro replaced the national currencies of the first 11 member states. And then 3 years later, the first euro banknotes were issued, so the euro began to circulate in people's hands. As previous speakers have also mentioned, with the birth of the single currency and the setting up of the European Central Bank, the EU member states wished to strengthen their economies. And we've seen different ways in which this happens. We have a lower transaction costs, freer exchange, and so on. In this way, and we reinforce the single market, but also the primary objective of the European Central Bank is to safeguard price stability. We must recall that before 1999, many countries were going through a period of high inflation. I see. I'm sorry. I'm told that you can't see my slides, so I shall have to share again. Can you see them now, please?
Sean, thank you.
Yes.
Thank you, Daniel, and do excuse me. So I can quickly go to the second slide where I said following the birth of the euro, there were 2 decades, the Great Moderation, and then a second decade where the euro area was hit by a number of shocks. The global financial crisis was the first big shock, and then in the euro area itself we had the sovereign debt crisis, followed by a period of deflation risks, very low inflation, and a gradual recovery, and this came to an end with the COVID pandemic. So in 1999, the euro replaced the national currencies of the first member states, and then 3 years later, the first euro banknotes were issued. In setting up the single currency, in setting up also an independent central bank, the EU member states wished to strengthen their economies. The single market, which had been launched in 1992, was meant to ensure the free movement of goods, of services, of labor and capital. Having a single currency makes all this exchange much easier, and therefore it reinforces the single market. And in many cases, many EU countries were coming off periods of high inflation. In the 1970s, there was a period of stagflation in many advanced economies. There was a period of currency instability in Europe in the early 1990s, which was inflationary, and there was a strong desire to make sure that price stability would be safeguarded. And for many of us, so ordinary citizens and businesses, large and small, the euro is primarily an easy means of payment, something we use when we travel, something that facilitates international trade, and it's also a safe store of value. So as people have already said, basically the euro area now numbers 19 EU member states. Malta adopted the euro in 2008, and there's a population in the euro area of over 300 million people, 340 million people. Monetary policy in the euro area is in the hands of the euro system, in a sense. The euro system is the European Central Bank, together with the national central banks of the euro area member states. There's a little distinction between Eurosystem, which includes the national central banks of those countries that have adopted the euro, and the ESCB, which is the European Central Bank, and the national central banks of the entire EU. So including also the central banks of those countries, like Poland, for example, which do not yet have the euro as their currency. The highest decision-making body of the ECB is the Governing Council. And the Governing Council basically decides the monetary policy stance for the euro area as a whole. The Governing Council is made up of a 6-member executive board chaired by the president of the ECB, who is currently Christine Lagarde, and the governors of the 19 central banks of the euro area member states. So monetary policy basically concerns the decisions taken by central banks to influence liquidity, to influence the money supply, the cost and availability of liquidity in the economy. Now, in the euro area, for a large part of these 20 years, the interest rate tool was the main monetary policy instrument that the European Central Bank uses to affect monetary conditions. So when there is a risk of prices rising fast, of high inflation, the central bank normally raises interest rates. By raising interest rates, it makes borrowing more expensive and it dampens spending. As aggregate demand is diminished, this dampens price pressures and brings inflation back under control. Conversely, if inflation is too low, then the European Central Bank or any other central bank would normally reduce interest rates to favor credit supply, monetary growth, and therefore stimulate demand and therefore price increases. Today, and we'll see this in one of my later slides, interest rates are extremely low, and the European Central Bank has complemented its interest rates by other tools, including forward guidance, asset purchases, and also long-term refinancing operations. Gilles Noblet has referred to some of these. Through forward guidance, basically, The European Central Bank makes clear its intentions for future monetary policy. So there's a commitment, for example, to keep interest rates low for longer, in a sense. And this affects interest rates today without touching the interest rates themselves. Through asset purchases, the central bank will buy bonds, for example, issued by the public sector or even by the private sector. And these bond purchases normally raise bond prices in the market and lower yields, and therefore makes borrowing cheaper. And finally, through longer-term refinancing operations, the ECB provides loans to banks at very favorable rates. And in the targeted long-term refinancing operations, the ECB also puts a condition that to benefit from these favorable rates, banks have to lend this money to the private sector, to companies and to households. Now, I've mentioned already that in setting up the euro, the founders wished to see price stability. And in fact, in the treaty and in the statute of the ECB, the primary objective of the ECB is price stability. In the treaty, price stability is not defined. The definition of price stability, in fact, is laid down by the Governing Council itself. And from the very beginning, price stability was defined in terms of what is known as the Harmonized Index of Consumer Prices, the HICP. This is an index of prices of goods and services that consumers buy on a regular basis, and the target is defined in terms of an annual change, so what we would call an annual inflation rate, for the euro area as a whole. So the Governing Council of the ECB does not look at developments in individual countries, but rather focuses on the average for the euro area as a whole, which means, of course, that in some countries inflation could be above this target, and in other countries it could be below. In July 2021, the Governing Council concluded a monetary policy strategy review where it refined this inflation target. At the very beginning, the ECB set an inflation target of below 2%, which would be a positive target, so anywhere in a sense between 0 and 2. And then in 2003, it said inflation should be below but close to 2%. So we want it not so close to 0, but not above 2, so below but close to 2. And in July 2021, the Governing Council set a symmetric target of 2%, always over the medium term. So the idea is that the ECB monetary policy doesn't respond month to month for shocks that might be temporary, but looks over a longer horizon to the medium term. And besides being beneficial in itself, price stability supports general economic policies in the EU. It favors investment, it favors a stable economic growth, and in so doing, it also favors full employment. So if I come to a bit of a narrative as to what happened in the economy in the euro area over these last 20 years, you'll see this chart and the remaining ones will have a two-color chart. The breaking point, the dividing line, is the bankruptcy of Lehman Brothers in 2008, which was basically the beginning of the global banking crisis. And you'll see the line shows credit to the private sector, the growth rate of credit to the private sector in the euro area. And you see with the collapse of Lehman, you see a sharp drop in bank lending to the private sector in the euro area. And in the subsequent years, credit growth even turns negative. So we had this shock, banks stopped lending, basically. They had to clean up their balance sheets, so lending actually turned negative. And then slowly, as the economy recovers and with supportive monetary policy measures, credit into the private sector in the euro area begins to grow again. Now, this banking crisis was the first in a series of major shocks hitting the euro area. So for the first 10 years or so of the euro's existence, from 1999 to about 2007, we have growth which fluctuates, but it is positive and generally very relatively stable. The lines, the thinner lines show the large 4 euro area countries, and the dashed red line shows Malta, which has a generally an above average growth compared to the rest of the euro area. But we see here GDP falling sharply when the Lehman Brothers crisis, when the global financial crisis hit. And then there is a gentle recovery. This continued in the rest of the world, but in the euro area, we had issues related to sovereign debt. So there were countries like Greece and Ireland and Portugal, which had problems due to the high level of public debt, and there was another downturn in 2011, 2012, and you can see it here. And then we had a period of gentle, gradual growth, rising slowly, until in 2020, the pandemic hits, and you see this sharp drop in GDP. This obviously wasn't only the case for the euro area. This was a worldwide hit, but you'll see again this very deep drop in 2020 and a very strong rebound in 2021. Now, this chart extends until the end of 2021. Unfortunately, as previous speakers have mentioned, the breakout of war in Ukraine means that the outlook has again become somewhat uncertain. And mirroring what happened in GDP, we see developments also in unemployment. So again, we have a decline in unemployment during the period of steady growth before the global financial crisis. Then when the crisis hits, we see unemployment rise again, level off, rise again in the sovereign debt crisis, and then begin to come down. We have a small upward blip in the time of the pandemic, but actually the recovery from the pandemic, also because of the various fiscal measures and monetary measures in place, was relatively job secure in a sense. Not many people, or at least less people than were feared, lost their jobs, and unemployment is now so far at historically low levels. But you'll see also the divergence. So this is the unemployment rate for Spain, which was hit by the sovereign debt crisis quite hard. And here unemployment reached more than 25% of the labor force, as opposed to, say, a country like Germany, where unemployment was consistently below the euro area average, as was the case also for Malta, and unemployment today is less than 5% of the labor force. So these economic developments also translated, together with the fiscal responses, into the stories, into the impact on government debt. Again, previous speakers referred to the Maastricht criteria. The debt limit is 60% of GDP, which would be somewhere here. At the beginning, at the onset, many of the larger countries were within this limit. The average was around a bit less than 80%, and a country like Italy had debt already at that time in excess of 100% of GDP. But again, once the financial crisis hits, there are two effects happening. GDP is falling, so the government has less revenue, and the debt ratio is over a smaller denominator. And also governments also spent money and issued debt to support the banking systems themselves. So from the global financial crisis onwards, again, the debt ratio rises. In some countries, it levels off and begins to come down. In other countries, it just levels off at a relatively high level. And here you see the pandemic again. So when the pandemic hits, governments have to borrow again to support the economies, and you see the debt ratios jumping up in most countries on this chart. And of course, the euro area average now is slightly less than 100% of GDP. So what was happening to inflation? After all, the main focus of the European Central Bank is price stability. So for this period until the global financial crisis, the dark blue line represents annual HICP inflation. You see it's relatively volatile, but a lot of this volatility reflects price spikes of commodities like oil. In fact, the green line shows inflation without energy and food, and this is more stable, more smooth. And on average, during this first period, inflation was generally close to the ECB's aim and averaged slightly more than 2%. Once the crisis hits, and we saw economic activity decline and unemployment go up, this meant that inflationary pressures fell, and inflation itself spent quite a long time below the 2% target. For most of this period, inflation is below the ECB's 2% target. And in fact, the average for the second period, so from 2008 till 2021, is around 1.3%. And we only have a very sharp increase in prices, mainly driven by energy at the very end of last year. It's continued into this year, and this reflects the rebound after the pandemic and the strong demand, especially for commodities like oil. And now we are also seeing the effects of the Ukraine-Russia war on commodity prices. So what was the ECB doing in all this time? Well, as I mentioned in one of my earlier slides, the interest rate tool was the key tool of the ECB, at least in the first half of its lifetime. So these are the key interest rates. There's a corridor, there's an overnight deposit rate for banks, the deposit lending facility rate. There's an overnight borrowing rate at which banks can borrow from the ECB, from the Eurosystem overnight. And this is the main refinancing operations rate, where the ECB lends money for 7 days to the banks against collateral. And for much of this time, there was a symmetric corridor with the middle rate, the MRO rate being the main rate, and these two rates moving in tandem above and below it. And this little dashed line shows Ionia. Ionia is the overnight market rate, and it was very, very close to the middle of the range again till the Lehman crisis hit. When there was this big shock, one way in which the ECB tried to stimulate economic activity was to cut rates sharply, which it did, and it continued to cut rates throughout the sovereign debt crisis until basically the MRO rate was brought to zero and the deposit facility rate turned negative in 2014, and it remains negative up to this day. So we moved into what was in a sense uncharted waters here. The ECB was the first major central bank to push official rates into negative territory, which means that for a whole band of interest rates in the markets, interest rates are negative even on certain sovereign bond yields, and the money market rates have moved towards this negative 0.5 towards the bottom end of the corridor. Once interest rates reach zero, it's very hard to push them even further down, because what will happen is people won't hold bank deposits, they won't hold financial assets with negative rates, they will hold more cash because at least cash doesn't cost you an interest rate. Cash has zero interest, not negative. So once you hit this very low region of interest rates, as a central bank, you have to think of other ways of stimulating the economy that needs it. And what the ECB turned to was basically the Eurosystem expanded its balance sheet. It did so in various ways, most importantly by buying assets. So it buys assets and injects liquidity, and also by lending money to banks for a longer term period. And you'll see here, again, after the crisis, the steady growth, there's a bit of a retrenchment here before we then move to a stronger period of asset purchase. And then again, this is the pandemic, as Gilles Noblet mentioned, the ECB responded through these TLTROs, these long-term refinancing operations, also through the PEP, which is a specific asset purchase program for this emergency, and the balance sheet size has risen considerably. But overall, in sum, if we go back to the slide related to inflation, although we can't say that the ECB hit its targets throughout, it's been relatively close. If the target is below but close to 2, and now it's 2, it is below for much of this period, but on the whole, we can say that prices have been broadly stable. And this is the conclusion on my concluding slide, a quotation from a paper by Frank Smets and Philip Hartman, and that basically over these 20 years or so, the ECB has adjusted its monetary policy, depending on the challenges it's faced, while keeping always this clear focus on price stability over the medium term. And I apologize once again for the mix-up initially, and I thank you very much for your attention.
Thank you, John, for your contribution, and I would like to thank all of the speakers. I will now open the floor to any questions or comments you would like to pass about this subject. So, does anyone have any questions? So, Mr. DeMarco?
Hello, good afternoon, and thank you for this very interesting seminar. Given the international role of the euro, which is used also as a reserve currency, is there really a need to aim for public debt to return to 60% of GDP when we see countries like the US, the UK, and even Japan living for so many years with public debt much higher than the 60% of GDP, especially at a time when, as already mentioned by you, there is a need in Europe for higher investment in the coming years to address the climate change transition and probably also the fallout of the conflict in Ukraine.
Could I add a comment, Chanel?
Yes, of course, Governor.
Yes, I think there's no magic about the 60%. However, I think the deputy governor rightly mentioned other places like the US and Japan, but I don't think any of those countries can be compared to the EU and its own issue, or I wouldn't call it problem, but target. In other words, the US hasn't got the problems for a union as the EU has. I mean, it's still we don't have the United States. We have much more elaborate countries with political, historical differences, and so on. So when it comes to the governance issue, the question of coordination and so on, I think we have to be stricter in order to compensate for that lacuna. And in the case of Japan, it's a one country. So by all means, I mean, a country on its own has to decide its own matter and future. So it's a point which I'm sure the Commission would be including in its discussion. In other words, fine, make it 70, make it 80. But the point is that the stricter the rules are, of course, we're all for flexibility and we don't want to paint ourselves in a corner. But, at least in my experience in the council, it is that it's no easy to coordinate, to have fiscal coordination and also discipline and governance, which are quite. So if we relax a bit too much, then other things will suffer. This is again from my little experience on the Economic and Fiscal Council. I'd see another.
Thank you, Governor. So next question is by Mr. Kakia.
Yes, good afternoon to you, and thank you for this webinar. My question is, for decades, citizens around the world have trusted central banks to uphold stable economic and financial systems with the help of cash. Now, many of us are aware of the famous phrase, not every German believes in God, but all the Germans believe in the Bundesbank. Those who follow the financial media are aware of the debates about what the European Central Bank has been doing or not doing to keep inflation stable. Imagine a pensioner who was used to get 5% for his little bank deposit at commercial bank, and today he almost gets nothing. And on top of this, he goes to buy food from the supermarket and finds that the prices are going up and up and up. How do you explain to this pensioner and others like him that the euro is a success?
Whoever wants. Shall I start?
Thank you for your question.
Shall I start? Okay. I mean, we have to divide the period between now that inflation is picking up with the low interest rates at a time when inflation was benign. So pensioners rightly are after some return, positive return on their savings. Fine. But at the same time, the inflation was close to zero. So in other words, I mean, it's true that we are fooled and somehow the population at large wants to, how would I say, would prefer some positive rate, 3-4% return, even though it's eaten up by the inflation. But that's, as an economist, I think it's futile. Now it's a different story. Now we're having a quite peaking inflation. The problem is that its source is not from the demand side, but from the supply shocks, which up till, let's say, till yesterday, we were convinced that they are temporary. We still have to see whether what would happen to the war, what would happen to the oil, and so on and so forth. So, but definitely, what the ECB wouldn't, and us as central bank, what we don't want, what like, is to have a high inflation, okay, and which goes beyond our target of 2%. So we are being pushed. I mean, today we've seen the interest rates going up in the States and also in the UK. So there will be pressure on us to act. We are taking each step at a time. And the first step is we can't, I mean, in fact, the example is that you don't, if you really want to brake and when you're driving a car, the first thing is to take off your foot from the gas. So we have first to reduce and finish off the asset purchase program. And only then we have to see, because of the uncertainty, whether we should then consider, depending on the outcome of the inflation at that time, the what is called as lift off. In other words, we start raising interest rates.
Thank you, Governor. So next question will be by Mr. Silvio Gallia.
Hi, good afternoon, and I would like to thank the speakers for three very interesting presentations and well researched, and also for the governor's insight. My question is mainly aimed for John, because John rightly so mentioned the Ecb Strategy review, which is something very important. And the aim of this strategy review was to make sure that the Eurosystem's monetary policy is fit for purpose now and also for the future. So my question is, in practical terms, John, what has changed as regards monetary policy with this strategy review? Thank you.
So thank you, Silvio. Yes. Over these 20 years, the ECB has reviewed its monetary policy strategy from time to time. The latest review took place, was concluded in 2021, last year in July. It was prompted by the fact that the previous strategy review had been carried out in 2003. And over this period, as I showed, in fact, in my chart, the euro area was subject to a number of shocks, a number of developments that were unforeseen in 2023. And 2003, but obviously then materialized. I would say, if you were to take it at its most simple, at its most basic, the prime conclusion of the strategy review was that the ECB's inflation target was clearer, made clearer, simpler, and more symmetric. So rather than have a formulation in terms of an inflation rate which is below but close to 2%, we now have an inflation target which is 2%. And why is this an advantage? First of all, it is clearly symmetric. So the Governing Council is saying that we treat inflation below 2% as seriously as we treat inflation above 2%. These are equally deviations from the target. When the formulation was expressed in terms of below but close to 2%, the implication was that inflation below 2% is less of a problem than inflation above 2%. And why is this important also in practical terms, in operational terms? It's because interest rates can't go very far below zero. So the central bank, if inflation is rising too fast, the central bank can always raise rates. In a sense, there's no upper bound on the interest rate, and the American experience under Paul Volcker, for example, showed how much the Fed was able to raise rates to bring inflation down. But when you have very low inflation and you have interest rates in nominal terms which are very close to zero or even negative, there is a limit to how far down you can go. So by formulating your target in terms of 2% and eliminating that below but close, clearly you are saying, look, I'm aiming for 2%, I'm aiming for symmetry. That was one clear gain. I think the other clear gain is that the below but close to formulation isn't clear enough. So some people might think that, for example, 1.6% is acceptably close to 2%, and some people would say 1.9% is close to 2%. And then you run the risk that you get different interpretations of different decisions of the Governing Council. So I think that was clearly one big gain. The other gain from a maybe operational side is that there is a recognition that interest rates can hit this effective lower bound. This is a novel experience. I mean, in 2003, in 1999, when the euro began, it was almost inconceivable that interest rates would go down to zero. It was inconceivable that inflation might even turn negative, which in fact it did for a brief period of time. So I think for these reasons, the strategy review was important. The conclusions are important. And then also there are two other spin-offs in a sense. There's also, as the governor mentioned at the very beginning, the recognition that climate change is a major concern. It's a long-run development. It's a trend we cannot ignore, even as a central bank, and it will affect everything. It will affect the economy, it will affect financial markets, it will affect inflation, and obviously we have to be mindful of that. And if I may add, and maybe this webinar fits in also into this, the realization through the strategy review that really the ECB and the general public in the euro area, the citizens that the ECB was meant to be serving, there was a kind of disconnect. People saw the ECB as something distant, and it was clear that things had to be made simpler. They had to be made more accessible. The ordinary man in the street had to be able to understand more. And there was an effort, if you follow the ECB's, for example, press releases or press conferences, the statements by President Lagarde, there was a conscious effort to make them simpler in terms of language, shorter, more accessible. And I think that is important. It's important because it's good for us as central bankers to get our message across. And it's also good for people to feel free to be able to challenge, to question, and get explanations that they can understand. So we can't just talk to the public, we have to communicate with the public. And this, in a sense, is an important, I think, an important outcome of the strategy review as well. Thank you.
I agree fully with John. I will not, extend his proper reply. All I need to say is that the symmetry, the message behind the symmetry, the 2%, and the symmetry behind, around it, is that we should fear deflation as much as inflation. Before, as students who were brought up fearing inflation, Paul Volcker once in a discussion I was present, he said, they asked him something about deflation. He said, I don't even know how to spell it. Because during his time, it was inflation. The monster was inflation. Deflation is a recent phenomenon. Now we know how difficult it is to get out of that, how it can depress the economy, and it's a different kettle of fish. But the point is, we should fear deflation as much as inflation, and therefore our attitude towards the 2% should be symmetrical.
Thank you, Governor. I will be taking one last question as we are running out of time. You can place your questions in the chat and we will get back to you later on. So our last question is by Mr. Christopher Pisani.
Hello, thank you very much for the presentation today. I have a two-part question, basically. As Professor Shikula mentioned earlier, the Bank of England and also the Federal Reserve have increased the rates recently. Bank of England has increased it 3 times in a row. And obviously, President Lagarde last week also decided to reduce the payment, sorry, the acquisition, the pace of purchases, sorry, I meant to say, like the PEP and the TLTRO and these kind of things. And there's an expectation that either this year or next year or sometime next year, there'll also be an increase in the rates in the ECB. Given that in Malta, most of the home loans and these kind of business loans given by the banks are variable rates, how would that impact the Maltese economy, and how is the central bank in Malta preparing for that, especially in regards to the possibility of stagflation? And the other part, there's enough time regarding if Malta is preparing for the CBDC's digital euro. As you know, the paper by the ECB was issued back in October 2020. There has been some developments in terms of discussions of how it will be implemented and the risks of implementing it. But as other countries have already started implementing such systems, what is Malta doing in terms of preparing for this potential development? Thank you.
Thank you for your question. Who would like to address this question from the panel?
I can take one aspect, and I expect the others to take the others. It's just one about, raising interest rates will affect those who have mortgages. They will affect everybody. And that's why it takes the Governing Council a long time to balance this fact that, and also the burden on the governments who have enormous debt in France, in Portugal, in Italy, in Greece. They dread the time when, and we don't know when that time will come, but it could be sooner than later, that we have to raise interest rates. So far, we've said we haven't decided, and we will take the decision, in the third quarter, and we'll see first of all whether the asset purchase program, the APP, would need to be the net purchase would be need to be ended. So we haven't reached that step. But the point is, the question is speculative in the sense, what happens if, all I have to say is that Malta is, sorry, the EU, I mean, or the Euro system or the Eurozone is different from the UK and the US who have raised rates. One has a Brexit thing issue and labor market issues. As far as the UK, the US has conducted one of the biggest stimulus package the world has ever seen of 3 trillion on top of another stimulus package before. So, and inflation is much higher. But the point, your question is simply what would happen. Of course, this is how we need to balance. On one hand, we have to fight inflation, and therefore we might reach a point where interest rates need to move up. And the second, by moving up, we would be subduing the growth, and this will be all over the eurozone. And in some countries, the debt burden will become bigger. I only answered one aspect. Maybe the others would like to. John, maybe you would like to address another aspect.
On the CBDC side, Elaine will also correct me if need be, yes. But of course the Governing Council agreed that an investigation for a digital euro is necessary. So in that sense, preparatory work in terms of research and so on is being carried out. And it will cover many aspects. There will be a technical side to things, so there will be the technology used, the formats, the way it reaches customers and so on. There will be also an assessment of how this could impact the banks, because on the one hand, we want to produce an attractive product. On the other hand, we don't want to destabilize the financial system by competing with the banks directly. So these are issues that require thought. There is a lot of work being carried out at the moment within the Eurosystem. We're involved in this preparatory work through our technical experts in different areas. So far, the flavor has been more of a payments side. So how to facilitate retail payments, how to make sure that people's concerns about privacy, about security, and so on are maintained. Maybe less so on the wholesale side. But clearly, there are a lot of aspects that still need to be sorted out, even technical ones. In a sense, we're in a sense, maybe Gilles can say something also on this. We're in a sense a bit in the middle. The Fed, for example, very recently, the Biden administration has asked the Fed to start preparing for a digital dollar. At the same time, other jurisdictions are maybe further ahead than we are. For example, Sweden, the Swedish Central Bank has moved much more on the technical side on an electronic version of the Swedish currency, of the krona, and the ECB is somewhere in between. Of course, in the euro area, the cultures are very different as well. So in some countries, the use of cash is declining very fast, maybe the Nordics and so on. In other countries, the use of cash remains very strong. So in a sense, if we were to say, do the public demand a digital euro, the responses might be different across the euro area, and this is also another factor to keep in mind. But the timetable is that probably, if I'm not mistaken, there will be then an interim decision. There will be a report to the Governing Council on to whether this is feasible and how, and then the Governing Council would have to decide on whether to launch or not. So at this moment, it's still in a kind of research phase where we're seeing what technical options are possible, what can work, what can't work. There will also be the involvement, and maybe Gilles is also aware of this, of the Commission, for example, what legal frameworks need to be in place to ensure, because at the moment Eurocash is legal tender, and it's the only legal tender that can be used to make payments in the euro area, and therefore what states would a digital euro have, and how would we have to change laws related to legal tender status, which is not in essence the legal remit of the ECB alone, but which would require changes in legislation that involve the other European institutions as well. But at the moment, it's work in progress, and it's at the research stage. If that helps.
And perhaps if I can add is that we as Malta, as another member state, we are actively participating with the work being done at the Eurosystem, which at the moment we are in the investigation phase, and we are working collectively with the other EU member states. Thank you.
It's a very complex challenge because at the same time, we don't want to fight technology like the Luddites. I mean, even if they are threatening. So we need to exploit the technology. At the same time, definitely, even we have the most powerful countries, central banks. As far as technology is concerned, we can never compete with the likes of Google, Apple, and others who have, the world at their fingertip. So it's going to be quite a challenge in itself. But I mean, our primary aim is stability, financial stability. No use getting all these, advanced cryptocurrency and so on, and then you create such a financial instability that you affect the economy negatively. So we have to balance things.
I would like to thank all of the speakers today and all of the attendees. And if you'd like to be informed about future events, you can follow us on our social media and subscribe to our website for further information. Thank you all.
Yeah.
Bye.
Goodbye. Thank
Bye.
you.
Thank you.
Thank you. Bye.
Thank you very much.